Welcome back to the podcast. Today we're breaking down the key homebuyer schemes and incentives available to those in Western Australia. That includes the 3 federal schemes, as well as what the WA government is offering. There's been some big changes in this space recently, so naturally it's a good time to stop and check out what's available. With me today is Dylan Marinelli. G'day, Dill.
Yeah, thanks for having me. Bit to get through today, so looking forward to it.
A bit to get through. Let's jump into it. Firstly, at state level, there's a couple of schemes that are available to home buyers in WA.
Yep, so the first home buyers owners grant, the $10,000 grant that gets available for first home buyers is still around. So anyone looking to build a new home or buy a newly built home, that $10,000 is available.
Cool. And there's also the assistance scheme, which has been around for ages, but is kind of often forgotten about.
One that we do forget about, the $2,000 rebate available for any purchase costs. So the most common one's probably your conveyance or your settlement agent. We can look to get that rebated for first home buyers as well.
Cool. Now, as well as the $10,000 grant, that also makes you potentially eligible for a stamp duty concession.
Correct. So anyone buying or first home buyers buying in Perth up to a price point of $500, we can look to waive that stamp duty, which is a significant savings, especially for first home buyers. And then there's a concessional rate applied from a purchase from $500 to $700. So all makes a difference when you're adding up your total costs for anyone looking to get into the market in those price ranges.
So I guess key points there, it needs to be a newly built home or not lived in previously.
For the 10K.
For the 10K.
Yep.
And stamp duty concession taps out at $700.
Correct. And that also is for established properties as well.
Gotcha.
So anyone looking in that 5 to 7 for an established purchase, you can look to get that concessional rate applied.
Nice. What about off the plan properties? Because there's a different set of rules for buying off the plan.
There is, and you probably see a bit of activity in the market with some new high rises going up, apartments and whatnot. So really important to consider these. So for pre-construction contracts, there's no stamp duty for properties up to $750,000. So there will be some options available for that. There's a 50% concessional rate applied for properties between $750 and $850, and then we go to for under construction properties. 75% concession on properties up to $750, and then a 37.5% concession applied for any property above $750.
Right.
A lot of numbers to think there.
There's a bit going on there.
Important to be aware of.
Sure.
Because they are becoming more and more popular in Perth.
So key message on that is if you're considering buying off the plan, make sure you get your ducks in a row beforehand.
Get your ducks.
What you're eligible for.
Correct. Understand what the contract price is. Talk to your broker, but also more importantly, talk to your conveyancer or your settlement agent, because they'll be all across these concessions and grants available for off the plan.
Sure. Okay. Turning our attention to the federal home buy schemes, there's 3 schemes available. We'll probably start. Let's start with the first home buyer guarantee scheme, because this has been quite popular and pretty effective, really.
Really, really effective over the last few years, especially for first home buyers, nationwide, really. But today we're focusing on Western Australia, but it is a federal scheme, so really popular. Anyone with a first homer with a 5% deposit, they can look to get into this scheme. Or one that's also been really popular is a single parent scheme where it's a 2% deposit. So really good opportunities for people in those situations to still get into the market. I think that's a real good feel story there for those type of clients. The most important factor for this is the fact that you don't have to pay lender's mortgage insurance. So quite a substantial saving on the facility, and also getting access to the best rates and products available. So there has been some changes to this scheme as of 1st of October, which I think they've been, fairly taken on. And the main reason is because of the caps. So no more income cap, which is, anyone with a strong income really opens some doors for them to get into the market. And I think for Perth, the increase in the property price cap is a big one as well. So previously it was at 600, now it's gone to 850. So opening up far more opportunities in the Perth market, given the median house price has obviously increased substantially over the last 4 or 5 years. So they're the 2 big changes to be aware of. And also, I guess the last one, which we probably need to touch on, is there's unlimited spots. So over the last few financial years, there's been caps on the spots available. Now it's available for anyone looking to buy their first home if they're eligible in those caps.
So 5% deposit?
Yes.
And no LMI, no mortgage insurance on those things, but you're still getting access to the best lending products.
Best lending products, best rates, and avoiding that lender's mortgage insurance. So substantial savings had there.
Any restrictions on the lenders? Are all the lenders playing in this space?
Nah. So only select lenders participate. There's been more and more come available over the last few years, but yeah, be aware that it's not all lenders will be offering that.
Sure. A bit of talk around the Help to Buy scheme. Sort of, it's been in the wings for a while now, but hasn't landed yet. Have we got any news on that coming on board anytime soon?
A bit of info still to come with that, but yeah, it's something that is coming to market in the near future. Essentially, it's a shared equity scheme where the federal government will contribute part of the purchase. Home buyers will just need a 2% deposit for the federal government, and they'll contribute the remaining 30% for an existing home or 40% for a new home. So that's something to look forward to. There is still a bit of an unknown when that's going to come through, but we'll keep an eye on that. There is criteria for this one. So it's for singles and obviously joint applicants over the age of 18. And there is some income caps. So for a single, it's 100,000, and for joint applicants or a single parent, it's a cap of 160,000. So slightly different to the home buyer scheme, but that's what we'll be aware of, and we'll be fully across it when they get released, and let everyone know what that looks like. So something to keep an eye on.
Bit of watch this space for that to come down the line.
Correct.
Now, the other one that's been around for a while now is the Super Saver. This was implemented a few years ago, but it's still around and still available to people, isn't it?
Yep, and still fairly common. We still see a fair bit of it, where a home buyer is getting some advice from maybe a financial planner, and they're looking to get that deposit quicker. So essentially, it helps our first home buyers save their deposit quicker by accessing some super. They can make extra repayments to their superannuation. I think it's up to about a 15K voluntary per year. And there's potentially some advantages from a tax point of view. So consult your tax accountant about that. We're not here to give that advice, but something to consider there. And it's up to a maximum of 50,000. So we still see it. It's a good opportunity for people to, get to that deposit quicker.
So outside of these schemes, so it's a bit of a complex arena where all these schemes sit, so check your options out there first. But outside of that, there's other options available. One of my favourites, obviously, the guarantee setup. Do you want to talk us through, because that's very common for us, do you want to talk us through how the guarantee works?
Still very common, and still a great way for our home buyers to get into the market is via the guarantor setup, and that's a family security guarantee, mum and dad or brother and sister, whatever it might look like. And yes, still very, very popular. We're still doing a heap of these because we still see them as a really good way and a really good structure to assist with home buyers. So zero deposit required, so you can borrow up to 100% of the property value. In fact, you can actually look to include things such as stamp duty and costs as well if you want to. And that's where we just have a discussion around, I guess, repayments and the available equity on the guarantor side of things if we want to go down that path. No LMI, so no lender's mortgage insurance like the other schemes, which I think is a really good factor as well. So, you're saving money on that. And once again, you get access to the best rates and products under that guarantor. Once again, not all lenders offer it. Not all lenders are great at it, but the ones that are, it's such a really suitable product for people looking to go under that structure.
And I guess under those structures, there's no caps or income restrictions or anything like that.
When we've got, singles or joints looking to buy property and they've got really strong incomes, this is where it really, it can really suit. And that can give the guarantor some comfort, in really good employment, good strong history of a strong income. So then it comes down to their borrowing capacity and sort of how comfortable they are with the repayments. But yeah, no price cap, no income cap, definitely on the guarantor side of things. So, and that's nationwide, of course.
And I guess the other benefit here is the removal of those guarantees. Obviously, the market's running, so valuations creep up quicker.
Yep.
But it's also a combination of the valuation and the debt being paid down, and we can look at removing those pretty quickly.
Exactly right. So that's one thing we always discuss with the guarantor is make sure they understand their obligations, given they're putting up their property. The goal and the way we structure it is always to release that guarantor portion as soon as possible, whenever we've got the opportunity to do so. So whether that's partial pay down of debt, or with an increase in value, which we are seeing across the board, especially here in Western Australia, we've been able to release those guarantees within a couple of years. Now, that's not going to last forever, but it's something that we do monitor when we're doing our annual reviews. So not only do we review our clients' facilities, we review how their properties are tracking and when we can release that guarantee, because that's our goal.
Awesome. So the parents are able to help the kids out for a little bit, and then as soon as possible remove it, and they're out of the woods effectively, aren't they?
Yeah, out of the woods, because there is, they had to have an obligation and they have to understand their risks involved with it. So the sooner we can release that guarantee, the better. And I'll, make sure everyone's happy and comfortable with that setup as well.
The sleep at night test, make sure everyone's comfortable.
Yes. Yeah, of course.
All right, well, that's just about all we've got time for today. Dill, one last piece of advice in the mix of all these schemes and offerings. What would your piece of advice be?
Obviously, a fair bit to consider, especially if it's your first time buying a property. So we always say understand each of these individual schemes and what's going to be most suitable for you. And have a think about the actual property itself, what you're buying, not only for the short term, for the medium term, and then make sure it's all aligned with the scheme that you do decide to go with. And look to keep up to date with any changes, because any change might impact what you can do. So really important to understand what's most going to be beneficial for your setup.
Outstanding. All right, beautiful. That's all we've got time for today. Dill, thanks for joining us, mate.
No, thanks, Alvin.
Appreciate it. And thanks everyone for watching.